Hi, my name is Felix Fry.
And I'm Marco Rajnica.
We're here to find great trading opportunities that target 150 to 400% returns. And you? Well, you're going to help us do it every single day. So welcome. This is the Winning Picks Podcast. This podcast is for educational purposes only. OptionsGeek LLC is not a broker-dealer. OptionsGeek LLC, Felix Fry, and Marco Rajnica are not registered investment advisors. Keep in mind, options involve substantial risk and are not suitable for everyone. Please consult your own investment advisor before doing any trading. Make sure you read the full disclaimer at the end of this episode.
Hello there.
Hey, buddy, how you doing?
Great.
Good. All right, it's Thursday, almost the end of the week. Almost. Yeah, let's get right to it. What did you see this morning? What are you seeing? What are you looking at?
Cool. I was looking at two interesting stories. Let's start with kind of a less exciting one, which is Unity and
I saw that. I saw the deal today, and
right.
And I saw that it's on the board. Okay, what do you got?
It's pretty interesting. Both Snap and Unity are on the board. Let me just see how I found them here. I think I was looking at change. So next page, and then next page. Okay, let's see where they're at.
Which one?
Here's Unity is actually right next to each other. Pretty interesting. So Snap had some change in price. They both grew 3%. Pretty interesting. Snap, of course, had a lot more volume because, they're just a bigger company and all. Unity just had an IPO, I think, 2-3 months back.
Okay.
Unity looks interesting because it's kind of a split between calls and puts. Mm-hmm. So that was kind of interesting, although Snap is more on the call side. And the change in volatility is not that high, but still, it was kind of worth taking a look at, mainly because of the story. And essentially the story is that they teamed up together to extend the reach of their ads and Unity's game engine. So Unity is a company that you use to build online games on. It's kind of like a platform, and I think like 50% of games online are built through Unity, which is pretty huge. Their stock has been on the rise quite well. You're going to be analyzing the chart a little bit later, so we're going to be looking at that. And essentially, they're going to be extending their reach to the Snapchat audience. For example, if a Snapchat account, you're going to be able to log into some games with your Snapchat account, which is going to be pretty interesting. And it's kind of the future of advertising. They saw that this platform has a lot more conversions when it comes to game downloads. For example, me, when I'm looking at games, an ad pops up and they let me play the game inside the ad. I like that, and I think that's kind of what they're doing, and so on and so on. So
I'm looking. So I'm looking at it. The first thing I would say. Yeah. Let me. Application here. All right. So let me look at what you're looking at. You see my screen?
Yeah.
Okay. So, I'm going to look for implied vols up first. I just want to hope that it's there. But there's Snap. Mm-hmm. And then if I wanted to do Unity, Unity. So let's start with Unity, right? Smaller company. Okay. 151 change. The stock's up. Earnings not until March. Volume is not terribly big, but it's a $150 stock. Probably volatility is high, 95. Okay, so the option costs a lot here, and to play at 150, it's going to be a bigger game. What I see here immediately is 49%, 50%. So half calls, half puts being traded. So and it's only 6,000 options. So I just want to take a look, and the minute I look, it's not necessarily super exciting because I usually take this out, right? This weekly is going to be, this is just back and forth, like day trading. January options. I think I told you this last week that as we get closer to December 25th, the holiday week, January starts on January 1st is on a Friday, and we're off from work on that day. So it's a short expiration week, expiration month, meaning the expiration month, the months that they expire the third Friday of every month. So if Friday lands on a Friday, I'm sorry, if the first lands on a Friday, then you only get really 2 weeks. You get 11 days in that month.
Mhm.
And if one of those days happens to be a holiday, you only get 10 trading days. So they will start likely selling options out within the next couple of weeks, just because unless they believe a big move is coming, most people don't want to be carrying these Januaries out, for probably the extent of January, because of this effect of holidays plus a shortened month. Now they might be rolling, or that you might see people rolling here. I don't see any of that. I see a bunch of contracts here, and the vol has actually come off a little bit. So it's just nothing that's super exciting as far as big volume goes. In fact, what I see in Unity is some puts being bought here or sold. I'm not sure, but looks like looks like they might have been sold, although I think that's an odd one to sell. But okay, so that's Unity. I don't really see much, to be honest. So let's go back to where we were, and let's look at Snap. Snap up $1.63%, 222,000 options. Okay, now there's all calls. Is there buying? That's the question. Is there buying? And the IV is not really up that much. So, Snap's had a significant move. So I see sort of mixed signals here, where it looks like perhaps people are just by forget about what I see here. Just by looking here, I can gauge that there's negative, there's, slight positives, there's a slight positive here. This is an odd month. So you really have volatility that's not moving, which means that it's not going to be terribly exciting, because I have a feeling that I'm not going to be able to tell whether people are selling or buying. And when the stock is up $1.50 and if people were buying 150,000 options in Snap, then you would see the implied vol probably move up 2, 3, 4, 5 points. We're not seeing that. And then when I look immediately, when this is December, you have a lot of options here, 8,000, 26, 10, 12, and you see this open interest here. It looks like people are they're just getting out of what the bets they had. So they had these bets on, and they're just getting out. Does that make sense?
Is that because the stock went?
Yeah, the stock. Well, it's just they're getting out because tomorrow's the final day. So December 18th, the final day, and people are squaring up. They're squaring up what they have on the table, if anything, right? So there's 46,000 of 54s, 26,000 traded. People are getting out, whether they're covering calls or whether they are selling out long calls. People are getting out. Then you look at December 24th. You had a big move in Snap. Let's see the minute by minute. You had a big move in Snap this actually yesterday at the close, but here in the morning up to 53.88. Okay, so it was up $2 and change. The 53s, 54s. This is maybe something that's interesting. The 54s, 56s. There's no open interest here, so not as much. So people are either they're getting out of their December 18s, and then they're rolling into their December 24th, another weekly. Again, this is not general. This is sort of faster money, a lot of day trading. This is a big name for day traders. So I don't want to confuse just because we see volume. I'd like to see volume where it's perhaps a setup or chunky. This to me is a little bit different, because looks like they just listed February options for chat, and someone's buying, the 60 calls for 7,500 times or 3,000. Like, this to me looks interesting, much more interesting than even 26,000 here or 18 to 44, 94 there. It's making sure that we're trying to find these setups. These again are 50, 55, 60s. You see the open interest. 5,000, 6,000, 8,000. You're not going to be able to tell really whether or not they're closing. And like I said, we're going into tomorrow's a weekend. Next week is the holiday week. People might be starting to close down some of these Januaries, even though the stock is racing and could potentially going up. I have no, Snap. I love Snap, but it's had a big run. So this type of volume here, when there's a lot of open interest, is not sort of super exciting. Certainly not the 2 December's weeklies. And we're looking more for this. This to me is a little bit more exciting than anything else. The 7,500 of the 60s and this. So now somebody buys the 7,500 of the 60s. Let's take a look. The next step is to say, can Snap? They're buying the February 60s. So can Snap get there? Right? Obviously, can get there, but can we look at the chart and sort of say, yeah, it's going to get there, or we have good reason to believe that it's a breakout here and it's going to get there. I look at this chart, I see a breakout here. It never really, broke out, went to 46, came back to 38, never sort of tested this area. So you have this huge gap here. Not saying it's going to get back there anytime soon, but in a big downdraft and in maybe in the fourth quarter, if they just decide they hate tech and they hate, these big names that have made a lot of money, I mean, there's a fundamental change here that they took this up, but you could see it get back to the 40, 42, 38 range, possibly on a big
just
downdraft.
inspect it so we can actually see the exact
Sure.
pointer up top.
It's weird how StockCharts doesn't allow you to do that, but
right.
Inspect it. Just inspect it. I got you. But anyway, here's basically the levels that I'm looking at, right? It's sort of 38 to 44. This thing has gone from 38 here. Now, clearly the story has changed. They came out with good earnings, advertising dollars and whatnot. That doesn't mean it can't go down. This stock has had a tremendous run, and like anything else, it's going up because the market is going up every single day. So, can it go down? Of course. Is it going down? When it's going down, I have no idea. Right now, they're betting, to buy that call option. Where were we? Where's the Snap? Let me erase some of these. To buy this call option 7,500 times, they're looking at, let's call it 75 here, 75, 76. You can back out that, he's looking at 77. That's a big number. It's a big number, but you get the earnings, right? And you see that it could happen. Now, is it reasonable to think that perhaps somebody might be just, again, reducing their position or changing around their risk reward? It's likely. It's likely. I mean, for example, if you were long Snap, let's assume you were long Snap and you hit this big run. I mean, what are you thinking? You're thinking, oh, I want to take some profits. I want to sell out a little bit. I want to, this is a huge run it's had. And stocks usually don't go up straight like this, but in a bull market, they are, and 53 is going to become 100 if it's the ultimate bull market. So we don't know, but, it does sound prudent to say, I'm going to take out some of my stock and then I'm just going to go buy these things and just relax and watch the earnings and watch what happens. Twitter was something where people are thinking the same thing where, the stock is going to go up and clearly everything's positive. And then it throws a curveball and you see what happens to Twitter and everybody who's long here because the stock looks tremendous. It looks great. And it looks like about to explode on earnings drops from 53 to 40. So, everybody's off sides here, leaning long, and then the market just drops it to 40. Takes a little bit of time. We're back where we were. But all these people that were long here, building, many of them got out here and you could see the volume. So they got out, they got hurt. And once they were out, the market said, all right, we're going to take it back up. And things are probably getting back to normal here. We like the stock because the market's going on. So I would simply say that I like the Snap. I like this setup better. It's unclear. With the stock up so much, it becomes just unclear how strongly they feel about this 60 calls. So that is the big question. Clearly, Snap has a lot of things going for it. They're making more and more of these partnerships. We saw the Twitter. We're now seeing this unity that you explained. So while I like Snap, it's reaching a little bit. These 60s go to quickly $1.50 if Snap just gets back to $48, $1.75, $1.80. And that's what we're always trying to prevent. There is an element of trying to catch it before it moves here, and that's what we're trying to do. So I would say on a 1 to 10, maybe it's a 6 or 7 or something like that. But
something to keep an eye on, right?
Something to keep an eye on. What else have you seen?
Cool. Another one I'm seeing is a little bit more interesting, and that's Macy's. So Macy's, they got like 550 locations across country. Curbside pickup is on the rise. Okay. For example, that UPS and these delivering companies, they're having a lot of problems actually meeting the demand. So
Mhm.
a lot of these retailers are actually looking into alternatives on how they can actually deliver their goods, because I mean December is a huge month for these guys.
Sure.
So what they've done is really interesting. They teamed up with companies like Postmates, Instacart, and DoorDash, and since they've got all these locations across the country, they can actually deliver to people easier that way. Now,
Sure.
is it more expensive? Probably, but like they're probably looking to get rid of stuff and to be selling as much as possible.
All right. So what are you looking? So where is let's look at
Okay.
let's find the
It's fine,
Macy's
Macy.
here.
There was one particular buy that seemed pretty huge. So
Okay. So let's look at it here. So we got
Mhm.
Macy's here. I'll you want me to take it for you?
Yeah,
Let's
for
see.
sure.
Okay, so let me here. Sorry. Let me put it back up. Okay, so Macy's, you see my
Mhm.
board?
Yeah, I see it.
All right, so I'm on Macy's now, and let me close this. That was you. Okay. So I'm on Macy's, and first I want to read it. So Macy's May stock is up 1.5%, up 14 cents, 79, almost 80,000 options. A lot of call activity and trading, a decent amount over the course of today on an RV, and IV's up a little bit. Okay, so it's up. Stock is gotten killed over the last 2 years. I know for sure.
Mhm.
So I think I have it up here. So Macy's. All right. Okay. Well, immediately the one that jumps out should be this one, right? The
Mhm.
December 31. So that's probably what you saw. Um, 38,000 open interest is light. Okay. I would say what's going through my mind right now is that this is an odd option to buy. The December 31st is not necessarily something that, the big guys buy. So there must be some sort of, besides, yeah, I mean, obviously it's the holidays and maybe we get the numbers, but
Mhm.
there's something going on there. December 31st. The reason I ask is, why not just go to January options, because that's really the ones that people come after, right? It's usually December or January. When you come for the weeklies in that type of size, it's just not usually the ones that people come to buy. So I think this is interesting. I think it's interesting to figure out what exactly they're looking at, and we may not know the answer, but it's probably Christmas, and the holiday season, and sales numbers after that season. But what you said was correct about these companies phasing out or trying to skim down their their mall presence, their store presence. I think you look at a name like JWN is doing a similar thing. But let's put inspect here. We'll just show you, and let's look at Macy's. I mean, this is April, but let's just go back. I would say to you, whenever you're looking at a chart, try to go back 5 years just to sort of see, the full
Where
story.
it's
So
been,
yeah, where
right?
it's been, what's
Mhm.
going on, what's the story? Okay, clearly this was bad. All right. They were doing some stuff. I remember Macy was trying to do a restructuring, and they were rebuilding if you remember going back 2, 3 years ago, they changed the whole way these stores went. They went from, you used to walk in and have a men's department,
Mhm.
and now what they did was you walk in and they have this area, they have all the different stores. So it's stores within a store. So the mall became a store. Macy's became this little mall inside Macy's, right?
Right.
You had your Louis Vuitton, your Gucci, your Christian Dior, Chanel, and whatnot. It was not like that before. So I think people got excited about that. Obviously, Amazon and the whole online presence, has hurt them. COVID crushed them. So they are probably here talking about bankruptcy, when it's $5 stock, and they're thinking they're not going to survive. The stock gets a jump here with the vaccine, and we're at $10. So, okay, it is what it is. Now, 5 years is great, but we really need to concentrate on the next 2 weeks, because that's what they're buying. So, um, now we get to the nitty gritty here, and you have, some volume here traded off again down to 5, and makes a move from 6 to 12. And here we are at 10. This looks like it's found $10, find some support here. This is a high volume day. So I'm going to go back a little bit further to see. I need to figure out My guess, if it was going to go up, if it was going to go up, go back a little bit. I'm going to go back to 12 months. Let's just go back 1 year. So 1 year here, and we're going to do 3 months. So if it's going to go up, where could it go? I think you have to. This is obviously a level of interest. I mean, this is probably looks like half the move eyeballing it from this down. This stopped here, went down. Clearly, somewhere around here, the big guys are thinking there's some values that they're buying it here. And then you have 6, 10.5. So it's 4.5, 15, which gets you to right there. So let's call it 5, 5.5, 6 to 10.5, gets you to 15, 15.5, which is sort of right around there. So $5 both ways. Is it up above here? Does it want to make this move? I mean, it looks like this happened very quickly. It's not like a lot traded. This is sort of, to some extent, a gap between here and here. There's just not a lot of volume. And so with positive news, if Christmas, the holidays go well, can it get to 15? I don't see why it couldn't. I mean, it's a big move, but I think, fundamentally, I think the bears are going to argue that, they're not going to be able to survive because you make 50, 60% of the year at the holidays, and they are playing catch up here, and they're using DoorDash, and DoorDash is expensive. And yeah, they might be able to get product out the door, but they're not going to make any money. Is that good or bad? I think the bulls then say, well, ultimately, COVID-19 will pass. We'll have this vaccine. And there's an argument out there that, the reason why the market's going up is that many of these companies have actually gotten better. They are better than they were 2 years ago. They're leaner. That doesn't mean that it's good for the economy, because leaner means they've spent millions of cuts, and they spent a lot of money on technology, and they're reducing the storefront. So something like JWN said, we're not going to be in the malls. We don't need the big malls. We can do a 10,000 square foot department store on the corner. It's much smaller than the 200,000 square foot department store that they might carry. And we could allow pickups. We can allow browsing. People want to come in and just look, go there, and then you can do your shopping online. The other thing is their biggest costs are the real estate that they hold their stores in. And once that cost is gone, and the margins running those malls, those stores within malls, is tiny, but they get the foot traffic, and that's how they're getting business. If you can take those costs out and pour that into building an online presence, I think with $1 billion, you can probably build something fairly quick and very, very good compared to what's out there. So I think that some of these companies have kind of come out of this much stronger than they were going in. And the pandemic for them, for companies, might have been, it's like for humans, we probably didn't get better, probably gained weight over the 7 weeks. We didn't go to the gym, but these companies, they had no choice. In order to survive, they had to get skinnier, and they had to get healthier, and had to cut costs, take out the fat, and focus on ways to make money in the future and a new plan. Take a look at Disney, right? Same thing, right? The parks don't work. Who would have thought that Disney can trade 170 when all of a sudden the parks aren't working? No more roller coasters, no more Mickey Mouse on the ground, no more Magic Kingdom, no more Star Wars, no more all of these things. And the stock goes way up to where, 165, 175. Disney's getting stronger in 5 years because they've just spent an enormous amount of human capital, actual money, building out this streaming. And they just announced 130 million people on board, raising prices. Even if it's just $1, they started at $7, they can raise $1 every day, and people still going to own, or buy that monthly Disney Plus for 10, 11, 12 bucks. So, you have these companies across the board, and you got to look at how's management gotten the company stronger. Some of these companies, like a Macy's, they had no choice. Either they got to die, it's going bankrupt, or they got to change. And I think what you're looking at is people maybe thinking that potentially there's this change or not. I mean, the Bears are going to say they have no shot and they're going to get beat by everybody else. But you know, it that's the bull bear case. So I would say I like the thinking. It's surprising. It's surprising to see 38,000 being bought here, and it looks like they were bought right out of the get-go. Stock traded to 10.15. Looks like these options came in to buy, and the stock ran up. So that's how you would read this. Like the volume comes in, the IV is going up, and the stock is moving up. So that tells me, yeah, these are call buyers jumping into the name here. Stock is held here for the rest of the day. We'll see what happens, but we'd have to look into a little bit more some of these stories as to, is there something a little bit more than just we expect there to be a good holiday season, or is the CEO is the CEO going to be talking? Is there a potential takeout in Macy's? Like, could some of these guys get taken out? I don't know. I would start looking more into that. Is that fair?
Okay. Yeah, definitely.
All right, good. I actually saw one that was interesting. I saw a couple, but I saw this Plug, which I don't know too well. I mean, it's hard to understand some of these names, but Plug is one of the leaders on the board here today. $30 stock, up $1, up $2, about 8%. It's trading 250,000 options. Are trading 84% in calls and 6% puts. This was something that IV is up 5% here. Something that I wanted to look at, and when I popped it open, again, I don't really look at this because this is a lot of just people getting out of positions, as you can see here, 50,000, 60,000. This one, maybe 31 people just playing for a pop today. But what caught my eye was this one, January 15th. Okay, earnings are not until March. So we have January 15, 60,000. So let's take a look at what this is. This looks like maybe somebody just immediately glance. Somebody's might be getting out here. So what are they doing there? Looks like some volume was trading here. Volume did pop up. The IV did pop up here. It settled off. I'm going to click here just to see if there was any spreads. Okay, not much. Okay, so interesting. I don't really have a definitive answer. It looks like, to me, it looks like there might be some closing out here. But this is clearly something that is not closing out. It appears, right? And I look at this and it's like, okay, 20,000 options trade right at the get-go at 10 o'clock and 10:04, 20,000. Now, and it trades on the ask. It trades at 206 on the ask, reference 3033. And, it looks like it's a higher IV than what has been transpired. So it came in at 105. 106 minus 1.1 is 104.9, so 105, and it trades at 110. So somebody paid up for this and just bought it, 20,000 times. This one is interesting. The problem with this one is the same thing that we talk about. These stocks have had massive moves. We're going to look at Plug here. Okay, Plug has had a massive move from like I want to say $3. And
wow,
it's gone. I mean, this is a moonshot. So like, I look, I think as we do this more and more, I am always trying to figure out why I don't want to do the trade, why I don't want to follow it, right? I don't want to be fooled. So I think part of me, I grew up in Queens, New York. You learn very quickly, this is mine. You don't take mine. And, I'm not going to be fooled because I didn't have much. So if I had like baseball cards, these are my baseball cards and I'm not going to let you take them from me. And I'm not going to let you fool me into taking them from me. That's as a kid, you grow up, you learn. Otherwise, you know what they do? They take it from you. You have a good card, they take it from you. And, you got to stick up for yourself and you got to outsmart the people who are trying to take stuff. Because everybody, when I'm growing up in New York City, in the area that I grew up in Queens, everybody's trying to take something from you. That's just the nature of where I grew up, right? And, so you learn very quickly not to be fooled and to understand and look at all the angles. When I'm looking at, it's not just I'm poo-pooing any of your ideas. I poo-poo every one of my ideas. I get excited about something and I say, okay, what's the angle? What am I, how am I going to get fooled here? Right. And that's really why I think that's the best thing you can do is to keep on pressing yourself. Why is this one a good one? Maybe this is it. Maybe that's it. And then there's some that are just going to pop up and go, that looks pretty interesting. That looks actually really cool. So this is Plug. This one scares me. Stock 3 to 30. Sure. Can it go up? I mean, we're looking at a option play where someone's buying the 35 calls, paying 206. So, we got to throw in a 46 target, and 47 target. So if this is a guy, and he is a guy who's big, who's spending a lot of money buying 20,000 of these, that's $4 million he's spending. He knows what he's doing. He's picking these. The beauty about this chain is that I've built it to think like he thinks. And so I can back out what he's thinking with some confidence level, right? With some, I know he's got to be somewhere around 48. The stock is only 31. He's buying a $35 call option, paying $2. He needs to make a decent amount of money here. Now I'm looking at the 35 calls, 3 to 1. So yeah, I mean, he's got to make 48 with 13. So he's trying to make 4 or 5 to 1. I would say it's actually probably a little bit closer to 47, 12, 5 to 1, 4.5 to 1. Yeah, I would say it's somewhere around. It's either he's thinking he's got a very high confidence level on this, and he's thinking a lower price, or he's probably thinking somewhere it can get to 47. It's a stretch, which makes me believe that perhaps he's getting out of his own stock here. This stock had a big jump from just the teens. I mean, we're talking about a month ago.
Right.
Stock is a double in a month. It's if I own the stock here at 15, 16, and I own 1 million share. How many did it buy? 20,000. I own 2 million shares right around here. Okay. Or maybe I bought it here and it goes from 15 to 30. I just made $30 million. And now I can take out $30 million, put it in my pocket of profits. Plus I get my money back. So you're talking about 60 million. I could take 60 million off the table. And now I can just put $4 million up and buy the 35 calls. That's logical thinking to me. That is good risk reward management. That's what you pay when you're going to put your money in a hedge fund. This is what you pay them to do. You pay them to get the hell out of this stock and buy some calls and reduce that risk going over the next, call it, 3 weeks, because something might happen in the next 3 weeks. We've outlined many reasons why the market could go down. Maybe. Who knows? Call it a 3 to 1 shot with the way it's moving, but who knows? And so that's what you pay these hedge fund managers to do, to get the hell out of the $60 million and go spend $4 million on calls. Okay. So that I don't know, that should, after, us talking for a while, that should start making sense. That's what people do. Okay. Right. They're not sticking around. They just made, what happens, the stock just trades off and the stock goes from 20, 30, 31 back down to 18. That's going to hurt. Yeah, you give up $24 million just because you were scared to get out of some and actually put it into calls. And so this is again what I'm always thinking. What's the reasoning behind it? So Plug, I think it's interesting. I'm looking at it. I see the call volume. It's only 6 weeks away. There is momentum in it, but I'm concerned that the real reason he's buying it is more for risk reward. What I do see here, and we can talk about it, is I see gold. Gold starting to have a little bit of a move, in the last few days. Obviously, Powell talked yesterday. It's more of the same of the Fed, and you got the fiscal stimulus, Pelosi and Mitch McConnell. They're going to announce a deal at some point. It looks like that's what the market's waiting for. That's why it's up. They want a big deal, and all of that is bigger macro topics on whether or not this is the right play. What does it do to the U.S. dollar? The U.S. dollar has been, selling off. And this is the reason why maybe people are starting to come back into gold and saying, you know what, this has been a good 4 months, 3 months of consolidation here. Remember, the bigger picture in gold is that we've come a long way here. Let's go down to just 5 years just to get a look. We've made a big move. Okay. This is not unusual to just come back down. So gold has gone from, you're talking about April in what's right here from the lows in 2018, it's gone from 110 to 195. And in the meantime, you had COVID, and then you have this, there's a bigger trend. This is a large trend higher in gold. It broke out here, broke out at 130, and it's traded, well ever since. And what I see now is this is the type of stuff that I'm looking for. I am looking for these types of long-term trends that the big money's not stepping away. They're not selling this stuff. It's the fast money that is taking this down and saying, okay, I want to get out of this. But it hasn't broken anything really technically. This is a long-term trend. And now after, we have, just move this here. After we have June, so here, August peak, August, September, 1, 2, 3, 4 months of basically down, people, getting out of some. And it's starting to, after 4 or 5 months, it's starting to show some a little bit of strength here. And I still think it takes maybe a month, but what I do see, so that's just gold, and I've been watching it. But then what I do see is the combination of gold and Warren Buffett getting into gold. And then I start seeing, let's just look at some of the names that are popping up here today. And you'll see, you see a lot of commodities, which is Goldman is getting bullish on commodities, but you'll see names like gold. You see the commodity steel, copper, gold, AG silver, right? So in the last few, gold was pretty quiet. I can tell you over the last, call it 3 months. It's not like you were seeing a lot of call buying, but all of a sudden it's starting to pop up. Silver, there's PAS. Where's PAS here? PAAS, Pan American Silver Corp, pops up again. Stock's up $1.50 here, 4.5%. So I'm starting to see gold names pop up. I'm starting to see the silver names pop up, and I'm looking at gold and I'm saying after 4 months, of settling in after this big run, maybe this is the new trend and this is what they're setting up, because the ones that they're buying, they are buying in this gold and PAS and HE. They're buying February, March, April options. That's sort of saying, that's the big money coming in saying, there is this big trend in gold. It's taken some time to come back off. We're ready again to start getting and moving into gold, and they position themselves to, to get into these positions. So that's what I would say about gold and some of these bigger names.
Interesting.
Very
interesting.
Why don't you have a question? Why don't you
I do, in fact.
One more question. Go ahead, go for it.
Take a break from some UOA. So my question is, if I'm a stock trader primarily, I didn't really trade options ever. I don't know much about them. How can I use options? Because with all this stock, we're looking at direction, we're looking at where these stocks are going. And as a stock trader, how can this actually help me, this options knowledge, without looking at the Greeks, the implied volatility, all these different things?
So
just simple stuff.
Yeah. So, when I was thinking about OptionsGeek, I was thinking about this person, the stock trader. Many stock traders have attempted to look at options, but they get stuck at simple questions that, as you know, there is no answer. You're not going to find an answer. Which strike should I pick? So OptionsGeek and 3 Steps to Profit is showing people how to think about choosing that strike price, how to think about when to use options. We're going through the motions here a little bit, but the fundamental understanding of what's actually going on is important for people to understand. So that's 3 steps. And I built the education and these tools simply for them, right? Because if you're a stock trader and you're looking for ideas, I'm trying to tell the world that the best ideas in the world are sitting right in front of you. They're right on the UOA options board. And they're the best ideas in the world because within those ideas, there's a lot of logic and a lot of thought and potentially a lot of information. Okay. So when a hedge fund manager, when they have the answer, when they've done all this research, hours and hours and hours of manpower and money and research, and they actually get the answer that they want, they see it and they say, this is good, or this is no good, or this is fraud, or this is a takeout possibility. When they get that answer, they're not sure they'll buy some stock, but they are running to the options market because they have found something that is different than what the market expects. And they understand what that means. And I'm trying to show you by using the options chain what that means. So this board has embedded in it many different trades and many different ideas. What we're trying to do is back out whether it's this just a trading idea or is there's a story behind it. Why is it happening right now? Why today? Why are we looking at gold names in the last 3-4 days? What's really happening? Who's making that call? And it's usually the big guys, or someone is saying, you know what, we've been analyzing gold again and gold names and we want to take them. Maybe that's the next sector. Right now, the big guys are thinking about what are they going to get out of by December 31st and what's going to be the new sectors or the new winners for next year. It might be more of the same, but there might be a switch of certain sectors and say, all right, we're going to get out of this and next year we're going to push this, right? Goldman comes out with a all clear on commodities. They upgraded ExxonMobil. Maybe Goldman is sort of saying this is the sector. Maybe oils, for whatever reason, everybody thinks it'll never, oil is dead, but for whatever reason, they decided ExxonMobil and some of these energy names. And okay, so maybe that's what's going on here. But I think for the stock investor, it's important that options do tell a story. And if you're not looking at options, you don't have to trade them, but if you're not looking at them, you're already at a disadvantage because so much of the volume that trades, the stock volume that trades today will stem from options trades. So you're there trading stock and you're seeing volume and not knowing where that volume is coming from. You should understand where that volume is coming from. You should understand that maybe the volume is coming from people selling calls or people taking profits. And that's what the options chain and that's what UOA does. And you can actually see it. And I've built these tools so you can actually see, like I've shown you, people are selling calls, the stock is going down. It looks like, the amount of stock that was needed for sale has ended, and now the stock is drifting back up. So maybe that whole supply demand in the 45 minutes is done, and now the stock could move to where it wants. If you're a stock trader, that's valuable information that the stock was down, not because of news and not because of anything. The stock was down because there were 20,000 calls that were going for sale, and those calls have a delta of say 50, and 50 times 2 million, 20,000 times 100 is a million shares for sale. Well, what's going to happen when the stock is a million shares for sale? It's going to go down. But if you know that, if you understand that, then you could say, okay, well, I love this stock. It's simply people repositioning or taking profits or getting out. That doesn't mean anything. Now I think I have more inclination because it's come to my level or whatever it is. The reason why I want to buy the stock, you're more confident because you're seeing that. And I think it's super important. I built OptionsGeek for the stock trader who wants to learn how to think like the top guys in the world, how to think about trading them, and also how to analyze them and how to look at them for ideas and gain ideas. Many times I tell you, Marco, that when you come up with your idea, it might be a great idea, but unless the new options chain gets a pointer within that window, I'm going to tell you it's probably better just to get into stock. That's what the options chain does. It tells you when you have an idea, forget about UOA for a second, but when you have an idea, is it a good options trade? And if it is a good options chain, which one should I choose? Well, the new options chain does that in a second, in a split second. Automatically, you type in what you think, and then it pops up. And if it pops up in that window, you might consider options. So for any stock trader, you never again have to actually think about, all these Greeks and all these implied volatility and everything else that is being thrown at people because it's confusing. And my message is always the same. It's misdirected, and it's not necessary for the average investor to learn that stuff in a way that's needed. I teach it in a high level where, we're going to go over it, and maybe that's what we'll do next week. We'll go over some of these Greeks and implied volatility at the highest level, just to understand maybe what you need to know.
Mhm.
If you want to go into the advanced stuff like open interest and analyzing open interest, then of course, I can teach you and you can see what it is. You could see the open interest, but to analyze it and to understand what might happen, that takes a little bit of knowledge of the Greeks, because what you're doing is you're trying to understand, who's on the other side of your trade. When you trade something anywhere on your app, Robinhood, wherever, someone is on the other side of your trade. Which, by the way, Robinhood was just fined $75 million because they didn't tell everybody that they were selling their flow to Citadel and Virtu,
Huh.
and that's who's on the other side of your trade, Citadel and Virtu, right? So they're
Just talk
taking,
about that next week,
yeah,
probably.
yeah. So it's good to understand who's on the other side of the trade, who's
Uh-huh.
taking your trade, and why. How do they make money?
Mhm.
How do they make money? So a stock trader should not be scared of options. It is a huge, huge market today. It's a huge market. It accounts for an enormous amount of the actual directional trading. In the stock, do you know that they say 90% of the actual stock trading these days is done by computers, like robots, running up and down. And so the options market still has many people that are playing the option for the direction. So you get this directional bent within the options market, and you spot it right there at the UOA. So for anyone that is just trying to learn, this is the pool where it's the best ideas in the world, because the guys who are doing these trades, they believe there's an outsized move coming. That's the reason why they're buying these things.
And these guys have so much information, so many resources. They got connections, they got data,
Exactly.
they got all these different things. Like me as an average investor, I can never come up with stuff like that on my own, right?
Exactly. And that's why I say to you, just because I like Target or I like these social media companies or like any stock, I'm not doing the 200 hours of digging that these hedge funds are doing. Maybe more than 200 hours. These guys are there all day looking at one stock. And I mean, it's a lot. And so I'm nowhere even close to that. However, the minute he acts and I get to see what he just did, I know that that's a big hedge fund. I know that they wouldn't do that unless they're doing some work. Now I just got to figure out, do they own stock? What are they doing? And that's where the discovery part is. So on a lot of these, what I will do is I will also look at, I've showed you this, go to holdings, see who's in the names, see what they have. Sometimes it's very clear. XYZ hedge fund owns 2 million shares of stock and he owns 1 million options. Okay. Like, wow, like that's interesting. And so he's in there and he's looking for a big move. So these are all the things that that it takes to figure out which ones you like out of the ideas. That's the process. That's what I'm trying to teach you. That's what I'm trying to show the average investor. Use the tools, one, to get an advantage on your own ideas, but then use the tools to figure out where the big ideas are and try to then dig a little bit to gain more confidence.
I see.
Okay. But yeah, next week we'll look at that and we can go over some of those things.
Great. Nice.
Cool.
Awesome.
The other one that I wanted to mention today was something like the SPY dividend. So it's important. I think it's just also important that people know there's a dividend today of $1.45 in the SPY, and there's right now the stock is where's the SPY 3. Because people are always talking about exercising and so SPY's trading 371.89. If you look at the chain, you'll see that it says the dividend there. A lot of these will be exercised. So people who own these, they will be exercised today. So tomorrow you will see the open interest on the 365, 66s, 67s, 68s, 69s, and some of the 70s maybe. you will see them all go to, you will see this go to zero tomorrow, or
Mhm.
close to it, close to it. So
The
if
in the
somebody,
money ones.
the in the
Or
monies, yeah,
uh-huh.
because if someone is long these and this, excuse me, there's 65,000 open interest. So people might be long the 65s. If you don't actually sell that today,
Mhm.
then you're going to lose the $1.45 tomorrow. You will see $1.45 times however many contracts. So if you have 10 contracts, it would be $1,500 that you lose,
Wow.
1450. Yeah. So that's why this is, again, there is professional traders that prey on, the fact that many retail investors don't understand that. So again, in the unusual options board, I've clicked on this to show you can every day. There's no dividends on Monday or tomorrow. Sorry. So this is the day before. You'll see a red D, and that'll basically tell you there's a dividend there's a dividend for goes ex dividend tomorrow. So
Mhm.
that would give you a clue. Sometimes you see a lot of volume on those dividends, but it will give you a clue that a lot of that volume might be the professionals leaning on the retail investor not exercising that evening,
Right.
right? Just
Right.
because they don't know. So that's something I think that's very interesting to go through. But
What else are you seeing?
what else am I
I
seeing?
think there
So
was FUBO. FUBO looked pretty interesting.
yeah, so Fubo's an interesting one. It's a name I've been looking at. It's got an upgrade, $40 price target today. Um, Again, you look at the chart. It's how do you? It was 2 months ago. The stock went from 10 to 35, and they're buying call options. It's very, very difficult. Pulling the trigger on that is very difficult to do. So, that's Fubo. They basically are cord cutting. In the cord cutting trend, they have. It's crazy. I hear these names and I'm thinking, okay, but I went to Fubo.tv and the it has everything.
Like
It has,
cable.
yeah, I mean, it's like cable and it's $69 a month. Their main pitch is that they also have packages of they have packages of every single sports game. It's like every Major
Mhm.
League Baseball game you want, every NFL game on the weekends, every tennis match, every golf game, every soccer, everything sports. And so clearly their target is the guy, maybe the guy who gambles on sports. So maybe there's this deal with like Penn Gaming or DraftKings or FanDuel in the works, and they charge $69 a month. They just did a deal, I think. What was it with? No, that was the other one. But they basically have everyone. My question with all these things, and I can never get a straight answer, is everybody talks about cord cutting, and at the end of the day, I always ask the same question with like, okay, you cord cut the cable, but right now, if I have Verizon Fios or people have Time Warner, they package it all together. You get phone, you get
TV.
TV, and internet, cable, and phone,
Mhm.
right? 3-in-1 package, and it costs like $200. And everybody's like, nobody's going to pay $200, and everybody's going to cut the cord, and they're going to say, you know what? We're just going to do internet. And
But
I always ask the question, okay, but what if, say it's Verizon? They're not dumb. What if they just say, okay, it's $200 for all three. If you just want the internet, Marco, 197, or maybe it's 220. Maybe if you just want internet, it's $220. But if you want all three, it's $200. You still have to pay to get the internet. And
right.
I just don't understand, at any point in time, I don't know. It confuses me.
Why would they ever? Because they build all this infrastructure, so
Right.
much money spent. Like,
Right. So to me, I find the cable company is not going to just lay down and die unless there's a new way to get internet into you, maybe satellite and whatnot. But then these companies, Verizon and AT&T, I mean, they own Dish. It didn't work.
mhm.
They they would buy the next technology if
Right.
it's this emerging
Or they
technology.
would
They're just
develop it. Right.
right, that they have to develop the ability for you to get internet on your TV in your house. And right now they have the cable and it's plugged into your house. So they could charge whatever they want. And if you're going to, all of a sudden, everybody's just going to say, you know what? We don't need your Verizon. We don't want your cable. Verizon's like, that's fine. So I'm just going to charge you $200 for the internet and
Right.
$1. You can have 200 for the internet and $1 for cable. However they want to slice it, it's just moving things around. I don't
Mhm.
know. I never get a straight answer. Whenever I ask the question, everybody's like, there'll be a new way. I don't know.
Right.
I'm not sure. I mean, I think that's why it's not a bad idea if you want to own AT&T long term, and it looks like they're doing some good things anyway, and collect the 7%, 6% dividend. That's actually pretty good too. But that's going off a tangent. The idea is this FUBO. They're buying calls. What can I tell you? They're buying calls in every one of these names, and it becomes difficult to keep chasing. But that's the game. That is the game right now, and it's a dangerous game, and it likely doesn't end well. And it'll only take one day to wipe out hundreds of millions of dollars of options premiums when
Mhm.
you wake up and every one of these stocks is down 15-20%. This one
Right.
is up 20% today, and people are reaching for calls here. So you have the 35s. I don't know if they're Vol's up here a little bit, so it looks like they might be buying some, but there looks like they're also buying puts here, or maybe this is long puts and then they're selling out. I don't know. Let's just take a look. Actually, 30. So it was 141. So opened at 141 and then traded up here. And these are puts. So it looks like maybe somebody bought puts right around here, looking at, where the stock was 30, 34 and a half. So looks like people have bought some puts here as well. They're playing both sides. You could see that there. And I don't know. I think it's a dogfight. Wedbush says $40.
Right.
I have no idea. I look at this and it's at this type of level of volatility. You got to be really right. You got to be really right, because even if it's up, let's take a look at it. Somebody's buying. Let's get an idea. Somebody's buying the 35 calls 5,000 times at 5.5. They think it's got to go to 50. Let's call it 53.
Oh.
Right, 53. Okay, so it goes to 53. And moving it around to maybe 70 or whatever, 70%. But you're around 53, maybe 52 at 80, and can it get to 53, 50? I mean, there is no limit to where these things can go, right? Any one of these stocks. I'm not trying to say that it's overvalued at all. It doesn't matter if it's overvalued. It's a story. Everything's going on stories. Everything's going on. Interest rates are low, and the idea that where else are you going to put your money? Stocks are doing okay, and the money's being poured into stocks. Bitcoin as well, right? Whatever, you have to have your money somewhere, and having it at the bank is not doing anybody any good. So this is partially what the government wants, I guess, to get people active. I'm not sure they want the money. They want people spending money, but I'm not sure they want all the money to going into these, to these stocks. I'm not sure. I'm not sure what what they want, to be honest. But yeah, that's FUBO, and that's you name it. That's every day there's all these similar names up there that are, they have a story. The call buying is unleashed, and it just keeps going and going and going, and at some point until that point happens, sure, some of these are going up 200, 300, 400%, but it's very difficult to catch them. It's almost like a mirage, if you will, right? Because one day you get one negative day and it becomes very hard to win.
I see.
All right,
cool.
What else? Anything else? Any other questions?
I think I'm looking forward to next week's analysis of
all right, I'll put some slides together too, and we'll talk about the Greeks. Talk about the Greeks, implied volatility, and I think what's most important, who's on the other side of your trade.
The trade, right.
Awesome.
Something good. Great.
All right, man. We'll see you tomorrow. I'll see you Monday.
See you Monday. All right.
Bye.